Hey everybody, we're almost at the end of 2024 and it could be time for some strategic tax planning. I'm planning on selling some of a losing position before the end of this year in order to offset some capital gains I have from some winning positions because it's generally been a good year for my portfolio. Before we get into it, please take a minute and check out the link you see on your screen, fool.com/Frankel. Get the top 10 stocks to buy right now from the Motley Fool. Best way to support this work I'm doing on YouTube, again, fool.com/Frankel. So first, let me share my screen real quick. Okay, so tax loss harvesting is a concept that's worth going over at first. So if you sell an investment at a profit, so in a taxable investment account, not in an IRA or anything like that, it can be subject to capital gains tax rates of as high as 23.8%, depending on how high your income is. The capital gains tax rates are 0%, 15%, and 20%. Those are the brackets for capital gains tax. And there's an extra 3.8% tax that applies to certain people who have a lot of investment income. So, however, investment losses can be used to offset or eliminate that tax burden. So, even if you don't have any capital gains, if you didn't sell anything at a profit this year, up to $3,000 in losses from investments can be used to reduce your other taxable income. Now, even if you have more than $3,000 in losses, anything extra beyond that $3,000 threshold can be carried forward to the next tax year. So, for this reason, strategically selling losing positions before the end of the year to reap the tax benefits is known as tax loss harvesting. So, before we go any further, it's worth noting that it's not usually a good idea to sell a stock just to get the tax benefit. It can be a good idea to sell stocks that aren't doing well, that your thesis hasn't really played out, that you're thinking of selling anyway. This could be a kind of a motivating factor to push you over the edge, but it's not a good idea just to sell stocks that you still like just for the tax benefits. You can't, for example, there's something called the wash sale rule, where you can't just sell a stock at a loss, buy it right back, and then claim a tax loss. That doesn't count. So without further delay, and I know a lot of people are going to give me a whole lot of grief about this, the stock that I'm selling in 2024 for tax purposes is a portion of my Boston Omaha position. So Boston Omaha, if you haven't heard me talk about this on my channel, it was the largest investment I ever made by cost basis. And it's really not down that far from what I paid for it, but it really hasn't panned out as I planned. And in 2024, some kind of thesis busting changes happened. So just to kind of go through a quick description of why I'm losing faith in this company. Number one, in 2024, they decided to shut down the Boston Omaha asset management business. That was perhaps the most exciting part of the business to me anyway. They were going to build out a built-for-rent housing fund and eventually spin it off as a real estate investment trust. They were raising third-party capital to go after these opportunities that were too big for them to fund off their balance sheet. They talked about raising, almost $500 million to go after broadband infrastructure. They gained zero traction with fundraising. Didn't communicate that to investors for the longest time. Pretty much kept saying everything's fine. And eventually, earlier this year, ended up shutting down the business, winding it down, and that was just a complete failure and a failure of communication. Management gave itself a very ridiculous compensation plan by any definition. They gave themselves a 15-year bonus plan that, because of a technicality, they got it all in 1 year, and then one of the co-CEOs left and took even more investor money when he left, but that's a whole other matter. So far, the people running the company have made quite a bit of money, and shareholders really haven't been taken care of at all. The compensation plan was ridiculous. I know there's nothing they can do about it, what's already happened, but that was a big, big red flag that they paid themselves that much money in 1 year for not doing anything really positive for investors. The core businesses have had so-so performance. Even the billboard business, which is kind of supposed to be their core, only grew it's growing revenue at a single-digit rate. whenever unless they're buying new billboard faces, these really aren't growth investments. It's profitable, but not by a ton. The broadband assets aren't really panning out as we thought they would. We keep hearing that they're going to start cash flowing in 2025, so I'm not selling my entire position. I'll get into that more in a minute. The insurance business is the most successful right now. It's growing at a very fast pace, but that's a relatively small part of the business and a relatively small market that they're in. It's surety insurance. So the core businesses, they're not doing poorly, but it's not getting me excited. The poor shareholder communication continues. I know when Adam Peterson took over, he said that communication is going to change, and to his credit, he is putting out investor presentations every quarter. Still no interaction with shareholders. They're not doing earnings calls. They just had an annual meeting a few months ago in Omaha and decided to make it in person only. People are not going to fly to Omaha to find out how their small cap stock is doing. If they live across the country, they could have easily live streamed the meeting like they were originally going to and decided not to. So the poor shareholder communication has not been fixed as far as my opinion goes. And the most successful part of the business is Sky Harbor, which they took public in the SPAC days. That stock is actually up about 40% from its SPAC price. Boston Omaha owns more than 20% of the company. They own a lot of warrants to buy more shares. They believe an exercise price of $11.50. That's doing really well. But that's not a great reason to keep Boston Omaha. That's a reason to buy Sky Harbor stock. It's a publicly traded company. So every time in message boards or whatever, someone always brings that up. Well, what about Sky Harbor? Yes, it's doing great, but it doesn't offset everything else I said, and I can just buy that stock directly, which I do own Sky Harbor stock in full disclosure, and I have no plans of selling that. They're doing an absolutely fantastic job with that business. So how much am I selling? I'm not getting out of my position entirely. I'm planning to sell about 1/4 of my Boston Omaha position, which kind of brings it in line with my conviction level at this point. It looks like a solid value investment, which is really the only reason I'm holding the other 3/4 of my position. On a conservative valuation case, back of the napkin, just sum of the parts valuation, I see an $18 to $20 per share valuation at a baseline. And like I said, that's very conservative, and that's, with Sky Harbor at its current price, doesn't include any more appreciation for that. I know they're buying back some shares. It doesn't include the effects of that. So it still looks like a solid value investment, but I'm really not excited about the business at this point. Is the reality. I'm not that interested in owning a business whose goal is to grow by a single digit percentage year over year. In 3 core businesses, and just there are better opportunities out there, and I plan to redeploy that capital in other opportunities. I may use some to buy Sky Harbor shares, but Boston Omaha is not making me happy right now. I'm gonna see if things evolve throughout 2025 in a positive way. We keep hearing that this is the year that you're going to see better cash flows from the broadband assets, for example. A lot of those were acquired or built out over the past year or two. It takes time for those to actually produce cash flow for the company. So we'll see if that changes this year. We'll see what other moves Adam Peterson has up his sleeves. We'll see if the insurance business keeps growing it at the rate it has. See if anything exciting happens with the billboard business. But I'll reevaluate this around this time next year and see if any further sales are needed. But I'm committing to holding the rest of it until at least the end of 2025. So I'm sure a lot of people have opinions on whether or not I should sell and why I should hold on to my shares. And I'd love to hear them. Please leave me any comments. I'll do my best to answer any of them individually. But for me, it's just not a stock that's getting me very excited right now. I know a lot of people are going to say that there's something I'm missing, or management has been doing a great job, which is what I've heard a lot in message boards and things like that. I don't agree. So I'd love to hear, what do you think I'm missing? Try to change my mind if you want. But I'm planning on getting rid of a little bit of that to help offset some taxable gains I've had recently. And I'd love to hear what you think. So thanks for listening, and I'll see you next time. I want to thank The Motley Fool for sponsoring this video. The Motley Fool is a company that provides investing insight and stock recommendations for investors of all skill sets and risk levels. You all know how much I love researching new stocks and trying to find the next best investment. So I'm proud to partner with The Motley Fool to bring you 10 stock picks from the popular product Stock Advisor. Stock Advisor has beaten the market by nearly 5 times. So go to fool.com/Frankel to get your 10 stock picks now. The Motley Fool Stock Advisor returns are 767% as of July 5th, 2024, and are measured against the S&P 500 returns of 163% as of July 5th, 2024.